right, I guess we should go. Yeah. Well, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. It's really nice to meet you. I'm a foreign exchange trader just like you. Not that it's an addiction. It's a love. Anyways, I love Forex. I love coffee. I like Forex and coffee. Very cool. So let me know how I can help. I've been doing this for a couple of decades. So technical analysis, fundamental analysis, trader psychology. Whew. Man, that should be enough for an hour of power. But the bottom line is I'll let you be the boss. I'll let you dictate. Tell me where you want to go, and we will do that. I am a humble servant. Let me know how I can serve. So, I got this going. You should check out QuantBox. It's a way to automate your fundamental analysis. The stock market, crypto, gold, oil, foreign exchange pairs. Pretty amazing stuff. Look how clear everything is. Just beautiful. Beautiful. You should check it out. If you feel like you don't know why you're trading, you should check it out. It'll tell you the why. If you don't know what to be trading, go to my new service. I'm about to launch it. Maybe today, maybe tomorrow, maybe today. Depends on how my meetings go. Yeah, maybe today the first soft launch, we'll call it, will occur. And this will tell you what to trade. Yeah. It won't tell you why. It'll tell you the technical analysis. So this is artificial intelligence that does technical analysis for you. I might launch it today or tomorrow. So only the people on the list will be notified. So traders.co if you want to try that. And then now that you know what to trade, and now that you know why you should be trading it, you need a broker that doesn't trade against you. Trader's Way is an ECN. They don't trade against you. They want you to succeed. It's better for them if you're a successful Forex trader. It's a symbiotic relationship. Hey, most brokers trade against you, and they want you to lose. Trader's Way is different because it's an ECN. They want you to succeed. So if you want a trading partner that will actually enter your trades into a liquidity pool, cool. Then your goals are aligned with their goals. And that's why I recommend them. Traders Way. So there's the complete package. Automate your fundamental analysis, automate your technical analysis, have a service provider that wants your small business to be successful. There's the complete package. Cool, right? Oh my God, that's so cool. Hang on, I was just doing something. And I think having browser problems. I hate when stuff like that happens. Anywho, all right, let's get on with it. Let's go. I think I need to reboot my machine, unfortunately. I think we'll get through today just fine. Let's go through our charts. Oh, Bitcoin finally did bust through 72. I was looking at it earlier today, and it was below 72. Cool. So it had a little move, making a higher high. I have a pullback number of 69. If it drops to 69, that's a go. Otherwise, I want to use the 4-hour 21, and that's about 70. So I have essentially two lines in the sand here for a potential bid. I'm going to have to clear my cache or something. And there's something going on with my browsers. Hang on. Sorry. I got stuff going on the other screen. All right. So anyways, let us go and take a look. Let me move my camera a little bit. I can't see. There we go. So much better. My WTI, we have that crazy vol. And it's been doing this for weeks now, where you have a big down followed by a big up, followed by a big down, followed by a big up. But the trade plan that we have in play right now is treating this like a higher high, higher low. A little bit dangerous because you can see somewhere in here, right? Let me measure a little further back. Ultimately, it could be heading down to the next lower low, right? What's it doing here? Now I can't get this. What comes around, comes around, comes around. All right, so that's really messed up. What's going on today? It's like gray. Oh, I see. There's good. I'm glad it went away. Let's do it again. There we go. That's what I'm trying to do, sorta, kinda. Obviously, it's not quite right. I don't know why they're not lining up, but, well, good. We'll line it up that way. You can see that there is a downward channel in play, isn't there? If you standardize these deviations. By the way, I was trying to do the math again, and my son and I were having a conversation. I'm like, well, you use your calculator. Oh, I know, because he's doing SATs. I'm like, you calculate standard deviation using your calculator? I'm like, that's cheating. And he's like, well, it's faster. And I'm like, yeah, you should still be able to do the math. He's like, you can't do the math. I'm like, pfft. So I had my wife call out a bunch of numbers. And I'm like, I was hoping she'd say like 3, 8, -2. No, she's like 69, -42. I'm like, oh my God, the standard deviation's going to be crazy. But I forgot one of the steps, the square of the sums. And I don't remember how to do that, if anybody knows how to do that. But nonetheless, the squaring of the sums, we have like, there's an outer move and then there's an inner move. And, well, we're very much still trending down, actually, aren't we, on this 15-minute chart? And so, like, this failure to truly hit target, because remember that this trade plan was supposed to hit a target here, but it rolled over on the first standard deviation. Huh. Well. So technically that is still very bearish. You know what I'm talking about? Now I've lost the chat. Can you believe it? Where did the chat go? You're kidding me. There, it's probably over here. There it is. Gee whiz. Why is the world so complicated? Does anyone remember the sum of the squares? Any math nerds here? Do you guys have math battles with your children? You should. Okay. This is one of the things we were talking about yesterday, and it's interesting because of this failure, and we went all that time without a higher high. Now you almost have to do a trap and break strategy, which leads towards the, either this or this, depending on the new direction. So, yeah, up is out right now. Okay. Unless you're going to do a, sort of a catch a bid off the 21 type strategy, that is played. And that was one of the things I just showed you, right? So that would be the blue. So on the 4 hour, you don't see it. Okay. But that's what it looks like. You don't see it on the 4 hour. Probably don't see it on the 1 hour. Probably don't see it on a 15-minute. Okay. But that's how it looks. To moi. What do you guys think of this one? Is that 21 going to hold? Or are we doing this next? What do you guys think? Gold up or gold down? This is where you type. Depends on CPI. Nah. Really? Oh, Donnie. Don no problemo. Yeah, of course you're right. Yeah. But better. Depends if the dollar's strong, is what you're saying, right? Yeah. Yeah, I got you. But all right. So what do you guys think is going to happen? Inflation month over month. I think inflation is going to be higher, but year over year lower. What do you want to trade? Ooh, good. It's working again. I had to kick the server. So let's say I'm right. Oh, it's still struggling. Let's say I'm right. If month over month is greater than expected, 100% chance the 2-hour trend for euro dollar will be down. Oh, what? Shut the back door. Shut the back door. You're like, I did. Cool. But I have this for every currency pair, every dollar currency pair. And if it's great, if I'm wrong, if it's less than, if I'm right as expected, right, or if it comes out as expected, what has happened in the past, and on the 2-hour chart, the 4-hour chart, the 12-hour chart, not chart, but going out 2 hours, 4 hours, 12 hours, 48 hours. And if it's working for me, and this was glitchy earlier today, let's do like, I'll just pick euro dollar 12 hour. I should be able to go all the way back through history. It's been having trouble loading it. But I can go through all the history and see how it did these calculations. Okay, so check this out. In 7 minutes and 24 seconds, the news is going to come out. This is, right, showing the percentages, and all we need to know is the actual. So now we need the results. And when the results come out, it kills the thing that didn't happen and just plots out based on the live news results. I mean, this is sick. It's ape crazy. By the way, this has been banned, right? This has been banned by a lot of brokers. So before I release that tool, I have to, I don't know. I think I need to add some warnings. Okay. Right, so here's us in dark mode. I don't know why the rest of the page is light, though. That's kind of interesting. Oh, they did good on the footer. Cool, they just did that today. That's nice. Right on. So, yeah. So maybe we can, so that's for euro dollar 4-hour chart. Why don't we do the 2-hour chart? Euro dollar 2-hour chart, just a little shorter term. Cool. 4 minutes and 51 seconds. So what we'll do is open euro dollar. Boo doo 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 doo. Oh, that's frustrating. There we go. But I guess I was wrong. Sorry, I've been listening to... Warning, been listening to Justin Timberlake this morning. Oh, no. Yeah. No. Yeah. Say it's not so. Hey, dude, this is pretty good. Guess what I could do is this. Maybe that's the better way of doing it. And we will drop this into, okay. Okay, now isn't it cool that it's a live database? 3 minutes and 30 seconds. So I'm going to do a soft launch, like I said, and apparently based on what the developers did overnight, I might be able to launch it today. Okay. Oh, my shoulders are so tired. So put your name on the list. The soft launch, not the full version and not this version, but the 61 cents a day version. I want to launch today for you guys to test it out for a few weeks. But again, only for people that sign up at traders.co. Okay. You see how it says right on the chart? Radars for traders. Yeah. Tradars. Yeah. All right, so now we're down to 2 minutes. Oh my God, what's going to happen? We don't know. CPI. So once again, here's my guess, if you don't mind me guessing. And this has to do with the base effects of the calculations of CPI. I think year over year is going to be the same or down, but this is based on month over month. And I'm guessing month over month is actually going to go higher. Now, QuantBox actually, I released a new tool today, a couple new tools, and it visually shows the change month over month. And then it'll update to show you the new change month over month. But I think month over month is going to come out, well, I suppose, look, the consensus here says as expected. So that's what I expect. So actually, I need to change this. Let's do this now. So I forgot the market agrees with my guess. So we got to go here to euro dollar if the actual is as expected. And then it shows the 3 variations. Okay, I want to do that one. And then it'll show us when the news comes out, it'll trim everything we don't need. It'll trim the fat. So this will change up here. 28 seconds. Shut the back door. I'm so excited. So if you're going to use a tool like this, you'll need Trader's Way or an ECN of your choice. Oh! What? Look, I need to go further out. I need to see. I can't do the short-term gobbledygoo. Let's go out that way. Daily, we need our numbers marked. 21 is way the heck down there. So I'm not sure why that didn't pop open. Oh my God, I have to pull it all up. Oh, it's still. All right. Well, I guess it takes a little longer than I was hoping. 3.2 year over year. What's the month over month, though, Don? That's what we're trading. $3.8 on the core, but we're trading monthly, month over month. Okay, big vol right off the daily 5, off the weekly central. You can do a trap and break if you're going to do that strategy. I got to bust this out a little more. Hang on. I'm not going to be able to do it with the... Okay. Trap and break. See, this is why I need a couple more weeks to do the full launch on traders, because it did everything right, but it's... Why is it taking this long? So, anyways. So 0.4, so that is as expected. Oops, so I had it set. Sorry. I tried to refresh it because I've never refreshed it before. So we go to euro dollar. If actual is right, 75% chance the 4-hour trend will be down. Okay. So that's the chart that we're looking at. 75% 4-hour will be down. So that looks more like this type of move. Oop, that's not right. Let's get rid of that. Delete. How will I draw this? That's not going to draw right either. No. Delete. I'll put it like that. So you can see, right, to 109.21. Yeah. That's even a little one. So anyways, we can look at, so what did happen? So we knew all this information. Oops, delete. We knew all this information up here before the news. Okay, we knew that. And it said if the actual is equal to consensus, which it was, 75% chance of down into this area here, right? And it did do that. So the next question is, will it continue over the next few hours? Remember, it's not talking about a 4-hour candle. It's talking it will generally trend down over the course of the next 4 hours. So the next 4 hours could look like this. And all it's suggesting is if you look at the starting point, if that's the starting point and the ending point, right, lower than the starting point, 75% of the time, 75% of the time in the past, when USD CPI came out, and it came out as expected, then 75% of the time it did close lower than the start of the news release. That's what it's saying. It's not guessing. It's literally calculating. But I wanted to take a screenshot and Oh, now it updated. See, it just updated. So we can draw the following conclusions about the expected movement of euro dollar based on the last 12 inflation month over month events in the United States. 75% chance that the 4-hour trend is down since the actual is equal to the consensus. So it deleted everything else. 6 minutes ago, the delta is 0, so it came out as expected. And in the past, that produced 4-hour downtrend. And now, for some reason, this event history has been struggling to load as of yesterday. So that's maybe another reason to hold it. But what it'll do in the future is it'll show you all the times that the delta was 0 and all the times it produced, well, not just produced a down, but produced any response. And then 75% of those responses would have been bearish. Okay, from the period of the event, okay, to the close. And it's only directional, you see. Okay, that's cool, right? And you're like, but I don't like euro dollar. I want to trade Kiwi dollar. Okay. Or you want to trade pound dollar. Okay. Why that? Why is that? Well, this has a 70 or 80% chance. It has a higher chance. Okay. Pound dollar over the higher time frame, right? Produced the best results. Cool. Nice, right? Nice. So the next thing that matters is PPI on Thursday. Notice that this is warning you, right? You see it highlighted. UMich on Friday. And then Monday night Eastern time, Tuesday morning in Asia, we have a Bank of Japan interest rate decision, followed by an RBA interest rate decision. Holy schnicker-schnocker. Shut the back door. And here's the predictions of direction of movement. What do you think of that? Oh, good. The history loaded. Check this out. This is the history of the RBA interest rate decision. February, December, November, October, September, August, going all the way back. Isn't that cool? Let's see if the history will load. November, let's do October of last year. Ah, it's beautiful. It loaded. Oh my God! So what it's doing is showing you how it's doing its calculations. Do you appreciate that? Being able to go all the way back to February and seeing what actually happened. See, what it's measuring is, did it go up or down? Did it go up or down? You have it for all this history. Did it go up or down? Did it go up or down? And it's looking for patterns in the, okay? It's saying, what was the pattern and what happened? Did they raise? Did they not raise? What was expected? All that kind of stuff. And it creates the probability in advance. We can draw the following conclusions about the expected movement of Aussie dollar based on the last 12 RBA interest rate decision events in Australia. If the actual is equal to the consensus, 75% chance the 2-hour will be down. How does it know that? It's looking at all the events, and you can see the calculations. It was down, and then it came back, but it still closed lower than the open. This was way down and straight down. This one was way down and straight down. This one was up. Oh, well, okay. It's showing that, and it's calculating that, and it's measuring that. Okay? Okay? Neat, right? Well, Uche, you have to think about it. Okay? If you have to then use your opinion. If we had 12 instances where the market got what expected, and in those 12 instances, 75% of the time the Aussie dollar fell. How can you make money with that? You need to decide. Okay? The AI is not smart. Let me repeat this. This artificial intelligence will not think for you. This artificial intelligence will not predict the future. This artificial intelligence will not make you rich. It will give you accurate information about past performance with great granular detail, but past performance does not predict future results. It will automate your technical analysis significantly beyond what you're doing now. I really doubt you're thinking about, okay, US CPI is important. Okay, you did that. And you're like, ooh, the markets are going to move on Tuesday when US CPI comes out. True. And you might even be thinking, well, if it comes out hot or cold, the Fed will do this or the Fed will do that. True, you might be doing that. But are you going back through your charts for every currency pair, every dollar currency pair, and going back to each one of those events and then analyzing them technically based on what's happened on the CPI, and then tracking how that reaction correlated with the expectation versus the reality, and doing that on 5 different time frames for every dollar pair? That means you got to do, let's do this. You got to do, so this is what I'm looking at. 1, 2, 3, 4, 5, 6, 7. Okay. Times 5 times frames. So you have to go through 35 different charts times 12. Because now you're going back for a year. So 12 times 35 is 420. So did anybody here go back and do technical analysis on 420 charts and then do comparative analysis for direction? Well, traders did. So why don't you hire a technical analyst to work for you? Like you're a hedge fund manager and you're trading $1 billion and you want a quantitative analyst to do technical analysis for you, so you have that granular detail on that particular news event. Well, that is going to be less than $100. So I bet you a technical analyst to do that level of granular detail would cost more than $100 a month. So that's just brute force, high level, oh my gosh. Yeah. So here's the trap and break strategy, right? What you're looking for is this or I had to go lower than that. Or this, okay? Probably what you would call a London breakout strategy. No, it's a trap and break vol. I probably should have had this as the level. But nonetheless, what it's doing is a vol range. I look at this on the higher time frame, and I prefer kicking off of this. See, when you're a fundamental trader, this vol doesn't throw you off. Okay? A fundamental trader buys into these moving averages as long as the fundamentals are still, in this case, bullish. Now, this will change when or if the stock market collapses on us, right? But there was no real surprise today, so everything's priced in. So the idea is fundamentally, a fundamentalist would just take this to the next level, and that's beyond 110. Okay, beyond 110. Now, that doesn't take into the vol, right? The account, like, remember, traders said down if the news is as expected. And, you know, over the course of 4 hours, so maybe it closes around here. That would still be a lower low. Or maybe it closes down there. But it did spike drop low as expected. But the longer term, and remember, I'm a macroeconomic trend trader. I'm a macroeconomic trend trader. And I look at this, and the U.S. stock market has not turned bearish. So as long as the U.S. stock market is either consolidating or going up, dollar falls. And when the dollar falls, that's the reserve currency. And 40% of the entire Forex market is euro dollar. So just based on what the dollar's doing, euro has to go up. Euro's not going up. It's euro relative to the dollar. It's 1 euro priced in dollars. But if dollar falls, euro dollar goes up. It has nothing to do with the euro. Euro versus gold would probably stay the same. But euro price in dollars, if the dollar falls, goes up. So I, as a fundamental trend trader, I would probably stay with this move this way until the fundamentals have changed. A technician would say, well, that on the long run would be true, but couldn't this also drop to the 55 and then come back down, and then we regroup later in the month for more up? And I'd have to say, yeah, because I would probably still buy a dip later, in particular on a daily, right? So now you get this sort of tug of war where a technician would say, when you hit this price that early in the month, very often you can drop as far as 108 and still be long-term bullish. Because that's a higher low. So technicians like, look, nothing fundamental has changed, but if we start making lower highs and lower lows, there's potential for the bullishness. And so right? So a bull would probably start jamming stops in kind of this price level and allow it to fall, and then a bull would re-enter here. A fundamental bull. Meanwhile, a technical bear would trade it down and then maybe trade it back up once they see this. So you have to understand there's two games going on. You have to understand both games truly to know if you're long-term long or short-term short. Richard says one thing that would strengthen the dollar is the Fed only cutting 2 times or not cutting at all this year. So I run an organization called the Council of Investment Advisors, the CIA. And we had a meeting yesterday. We have a meeting coming up next week. I've given them $8,700 of my money, real money, to invest. Last time we met, I gave them about $10,000 to invest. So they're making investment decisions, right? And we have a model to predict recessions, aka predict Fed cuts. And it's pretty sophisticated. And we also know the Fed actually uses this model. And many, if not most, people on Wall Street don't even know the model exists. And we watch it, and it doesn't say a cut now, but it says it's coming. And I'm pretty sure the Fed uses it. I'm pretty sure the Fed is using it as their main tool to decide when to cut. And Powell says, we're getting close. We're getting close. Our model, which we reviewed yesterday, is suggesting we are getting close, but not now. Not now. Not now. Not now. And the thing is, if more people on Wall Street knew about this super secret model and were using it, they would not have guessed wrong in December. They would not have guessed wrong in January. They would not have guessed wrong in February. Because remember, in January, February, they were talking about 6 cuts, and that was going to happen imminently. Well, they were wrong, not misinformed. They were grossly wrong. And yet our model, and again, I think the Fed is using the same model, to suggested there's no way in hell. Wouldn't you like that info, that intel? Uh-huh. Super exciting. Richard, why don't you join the CIA? You guys can join. Again, you get a training course, which takes you, I think, about 12 hours. Then you should watch the video from our first meeting, which our first meeting was about 7 hours. So you should watch that, because then you know how we constructed the portfolio. And then next week we are meeting, and we are going to go through and rotate and allocate the portfolio. Like I said, the meeting we had in November, we invested, so there was $50,000 in the account. I gave the council $10,000, and now we're meeting next week, and I think it's $8,700. It might be $8,200 dollars to allocate. Plus, we need to rotate and rebalance the portfolio based on our projections for market performance over the next 3 months. And by the way, you see the portfolio. We went over how much income. So the portfolio was earning 10% income. I think it was in the first 3 months, it was up about 4% plus the 10% annual income on top of that. So in the first 3 months, we're up about 6%, which is but with lower volatility than the stock market. That's exactly what we're designing. And so many people are using this group to learn how to manage portfolios and construct portfolios. Many people are using this group to maybe one day for charitable contributions. I manage endowments, so it's the same idea for the endowments. Many people are using this group to learn how to manage their own retirement account and pensions. So this account that the CIA is managing is my corporate pension. Which is cool because it's also a a tax strategy for my corporation. But it's real money in a real Wall Street firm. We're looking at the real portfolio. I'm giving absolute total transparency. We even log into my actual account. Like, it's pretty cool. So you're welcome to join. What's the catch? There's no catch. It's $5,000 a year. And if you quit, you can never come back. So it's designed for you to be part of the group for many years. There's a cap on 20. We have 8. So we're going to slowly grow it. I think in 2-3 years, we'll have our board of 20 members, and no one else is allowed to join. Now, she says at one point they were predicting 7 cuts with the model that my CIA uses. We knew there was no chance of that. None. There wasn't even a chance of 4. We were looking at it, and like in November, we were talking about June is the likely first cut. June. Yeah. Oh, right on, Denise. I like it. I'm glad that we did that. I was a little uncomfortable, but whatever. I'm glad we did it. I think it was the right decision. Cool. So we'll see what goes on here. Okay. So it's been a half an hour now. Okay. As a reminder, 28 minutes ago, 75% chance euro dollar would be down over the course of 4 hours. It dropped straight down, came all the way back, and now is heading straight down again. Okay. So look at, this was the live chart, if you remember. Let's do it this way. I think you can see this. That candle, 109.37. Okay, 109.37. So we were right here when the news came out, and it's saying down. Now it's pointing at 21, which is where we are now. It went a lot further than that, but it's not actually intended to say down to 921, 109.21, but down towards. So, right? And so I think it's trying to give you a slope. So like, what if it did this? Well, let me try to draw that a little less pathetic. Okay, what if it ended up doing this and closed at 921? Okay? You might want to use that as a sort of, it's going to drop and then out on the up. Okay? And it's you doing that on a 15-minute chart. We are looking at this on a 5-minute chart, right? So so you got to break it down more like let's say, so the daily target is there, and then up around here, okay, and then down further, right? So you could say on that on that first move, you're going to be quick to take profit. On the second mark, you're going to be quick to take profit. But then on the third one, it might be a re-entry. Well, let's look at that idea. So this is month over month, 4 hour, euro dollar. Over the course of 2 days, we can look at the past. Okay. Yeah, it's been struggling to load these charts, but the data is still there. It's just struggling to pull the charts. In the past, in this situation, every time on a 2-day basis, euro dollar was lower than it was at the start of the news. So you could then say this, let's bust out, and this is for you swing traders, not your new scalpers, but you swing traders, right? This is a fall, and then this is tomorrow, and then this is the next day. So you might do sort of like a scalper could take this out, okay, re-enter, drop here, and take profit. The second trade is probably catch, the end of day, kind of profit taking from the scalpers, and then short it for 1 or 2 days for maybe a swing target back to 108. So you have your scalp, and then you have your swing. And of course, your scalp can be the swing, where, this first initial move is your swing, and you intend to hold it for 48 hours. But I think many would take the profit here and then re-enter later today and then take it down for 2 days. Does that make sense? Using the, remember, it's not a prediction. It's what happened in the past. Don Pablo says, why is it using month over month? It's where it recognized the patterns. Okay, so the question is, why not year over year? It didn't. So here's the calendar. Okay, this is the calendar. But you're like, there's hardly anything on this calendar. This is the calendar going out to the end of the month. Well, it's looking at the patterns it recognizes. So you need 2 things. Okay, it looks for volatility, and then it looks for patterns. Okay, it's technical analysis only. Okay, it doesn't understand what any of this means. It only looks at, did the market move? And was there a pattern to the movement? You understand? Makes sense, right? And then it says these things in the past, looking back years, have discernible patterns. Because not only is it looking at that, it's looking at what the market expected. So you have to pull that data in from somewhere. Okay? Michigan consumer sentiment. So it has to know what the market expected and then what the market got. Did it create volatility? And then is there a pattern in the volatility for greater than expected, worse than expected, or as expected? So if there was no pattern to the volatility, it's not going to alert you. If there's no volatility, it's not going to alert you. It just filtered out. You have to appreciate that. It filtered out hundreds of news events by looking at the data and analyzing the data and seeking patterns. So there's hundreds of things over the next 3 weeks that are not on this calendar. And it's like, why don't you consider trading Canadian inflation on the 19th? And then, of course, now it's active live database, as you saw, counting down in real time and grabbing the news and showing you the patterns. Like, this isn't really, 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 really powerful. Okay. Okay. Get on the list if you agree with me that that's really, really powerful. Put your name on the list so I can inform you when it's ready to go. You can see I'm about 98% ready to launch this. Okay, the list is here. Okay. Just to let you know, the first subscription level that I'm going to offer today or tomorrow is 61 cents a day. $19 a month. Huh? 61 cents a day? What a knucklehead. I'm not joking. Not for that. Not for that. Not what I just, not for this. Not for this. That's, I'm going to need probably, I'm going to need a few weeks before I can, I want to make sure it's working perfect, right? I need a couple of weeks for that. So the first subscription level, I call it Traders Lite, really is what I should rename it. It's the light version. It's the cheap version. It will help you identify technical analysis patterns. It'll be a way for you to then look at the patterns it's given you, confirm it on the charts. Do you agree? Do you disagree? It's like a daily point you in the right direction. Go check this out. Here's the technical analysis the AI generates type subscription. Okay? Super basic, but super cheap. But very, very useful. Very, very useful. And it'll be like, try it out for a month, and then I'll do a proper introduction. Once everything is ready to go, I'll give you a tour. I'll show you everything that's available. I'll give you those opportunities, and you've already been playing with it for, let's say, basically a month. Okay? I think that's the right way of doing it. Okay? And basically, if you're not on that list, I'm not going to let you sign up for the next level. I'm only going to let people like that are seriously want this to happen. Those people are the first ones to get in. Yeah. So anyways, it's heading down. Cool. I guess we got to move. Let's do a couple other things and we'll get out of here. But I'd say that was pretty good. I would say that's pretty good. 75% of down. Yeah. Remember the trap and break strategy, which I showed you. If you filter it out, okay, you have option A, okay, or I guess I should do it this way. Option B. Now, if you filter it out with a bias, so you're like, ooh, I want to trade it like traders, then you would say, you would do it this way. A, because you're doing filtering. Okay. Or, of course, the original B. Then, again, because of traders, you say that you could take some profit down in here for your first little, I would call that your short-term profit for you scalpers and day traders, right? Then the second one is if or when you get a reload. So now we're talking about a point in time here. So I'll put it like this, like pivots, right? Or here, that's for you swing traders, also using traders, because you know on the short term, there's 75% chance of down. Or in the past, 75% of the time it went down. But in the longer term, meaning 2 days, there is a 100% chance. So you would probably try to use both pieces of information, wouldn't you? And if it went up, you'd probably just back away and say, well, I don't want to know anymore, because you positioned yourself based on, right, the past. Again, past performance doesn't predict future results, but it could help you shape your strategic and tactical behavior to say, well, if it goes against what has strongly happened in the past, then there's some reaction by the market that I don't understand or that is unique to this situation, but I don't know what that is. So I step aside. But if the market behaves the way it's behaved in the past, then there is logically a discernible pattern that I could trade. And it exists both short, medium, and long term. So I could do a scalp, which worked. You saw how quickly it moved, though. And then there was a market open type trade, which is happening now, which would probably lead to a day trade. Then there'd be profit taking at the end of the day, and then it would rally up, and then maybe on Asia Open, there's now an entry for a swing trade. So you get a scalp, you get a day trade, and you get a swing trade. And why do you know that? Because we looked at multiple time frames and analyzed and discovered that pattern. Okay? I mean, that's serious information. That's like serious deep dive research. Yeah. Cool. But now you know. Now you're informed. Crazy, right? Yeah, crazy. All right, so we had to talk about yens. Sure. Talk about yen. Yeah, we had some big opportunities on the higher time frames, many of these. Let's see. So how do I do this? What I said yesterday, when we were down here, okay, what I did was guesstimate where the higher time frame moving averages are going to be for a potential new sell. Now, it's just technical analysis. Once again, is this based on UAD? Not necessarily. Okay. But if you're going to trade this technically, again, a trap and break, and then you could then look for setups that you filtered maybe fundamentally or whatever your bias is. So if you still believe that, if you believe that it's been falling and that it will continue to fall, then you could say a retest here could lead to a down in the next 12 to 24 hours, okay? Or a move like this. You got it? And you're only thinking down. This is what I said yesterday. Okay, Don Pablo? Last night. So, 17 hours ago. Is that right? 4 in the afternoon. 12 would be 4 in the morning, and it's 9. Yeah, okay. Yeah, 17 hours ago. 17 hours ago. So when we were here, it's all been done. That was before the up even occurred. This is what we do at the day trading group, y'all. So here's the thing. I can give you hardcore technical analysis, way beyond what most people are doing. I can give you fundamental analysis, hardcore, far beyond what most people are doing. Very institutional level information that is actually, when you look at what the institutions pay, very expensive. But you still need to know how to trade. So that's where I can sit here and say, well, it's going to go up. And when it goes up, then you have to make a decision. Are you going to sell again or not? That's going to be your decision. That's your alpha. But let me show you how to set that up. And of course, at that time, the 21 was way up here. And so I had to analyze this and guess and say, well, I see a role reversal. I see the future 21, which I'm going to guess is going to be about here. About here in the future. And I had to look at all of that and had to guess and put some ideas in there and say, well, if that's what you're going to plan, this is how you would plan it. Yeah. And then you have to do that and say, well, that's the CAD. Okay. Aussie's different. Well, let's analyze Aussie. Okay. And once again, trying to find the 4-hour or daily, really. And if I was a bear, I'm not going to tell you if I'm a bull or a bear. I'm not here to make that decision for you. But if you were a bear, holy smokes, is this interesting. What this chart says, not what me says, not what fundamentals say. Ignore all of that with nothing more than this chart. If you are a bear, this is dropping to 94.5. We're at 97.5. Will it? I don't know. I have no idea. But that's how a bear would plan. That's the bearish strategy. I can tell you also where bulls are going to get involved. Okay? Bulls are going to get involved down here. It's a little late for them, and that's a little dangerous, but that's how a bull would trade. And I'm thinking that bulls should have bought earlier. They were supposed to buy this around 97 and a half. I guess we're at 97 and a half now, but earlier. This failed trade plan, you see? This one here, it's not actually failed. That's what the bulls were supposed to do. The bulls tried and they got overwhelmed. Is that strategically important? Well, yeah. Well, if bears are in control, then this is what is probably going to happen. Some version of that. Which means this is a very interesting price for a sell. So I'm going to mark this. I'm going to mark it with an X. It's not going to work out quite well. And I'm going to get rid of that just for clarity. Okay. And now I'm going to drop into a 15-minute chart. And all night, you should have been waiting, if you're a bear, for a bearish technical response to that price level, right around this 97.5 to 97.70 price. 97.58. Okay? Do you see the level of detail that is required? So you're sitting here and it's going up. Good. Are you a bear? Yeah. Well. Cool. Well, on the flip side, right? What if you're not a bear? Okay. You ready for this? Okay. So now what? You have permission to engage when you okay, I have to change this. So you're a bull, right? So you come to me and you're like, Wayne, I'm a bull. I'm going to hire you to create a bullish trade plan for me. Okay, great. So you send me a Bitcoin and I'm like, well, the first entry here is around 188.36 to 187.95. Actually, is it? I thought it actually said something different. No, 188.08. So somewhere between 188.00 and 188.37. And your short-term target, okay, confirmation that it's worked, will be 189.65. Okay, let's do that. And beyond. So actually, let me redraw this. Okay, we'll do it this way. I'm going to use the pivot because it's right in the middle of my two target lines. Okay, and if we're going to make this a swing, because I'd rather make big money. I hate scalping. Scalping, right? That's for people without confidence. All right. Like, wait, I'm going to get hate mail now. No, okay, I take it back. I'm sorry. Then the follow-on is going to be more like this. And then I would take it further, and that's an S1, so R1. So that would be the target. If that's what you believe. I don't know what you believe. See, I don't know what the future is. So you have to filter all the possibilities, filter out all the ones that are distracting, and say, well, I have analyzed this chart, and I have analyzed the fundamentals, and I have a belief system that pound yen is going to go up. Good. Then all the mediocre stuff that shows sideways, or all the stuff that's falling, you ignore. If you're a bull and this is falling, who cares? But if you see it kick off of support and then create price action you deem bullish, then get in the game, son. Oh, but you're waiting for the MACD to tell you what to do? Forget it. You don't even understand. The indicators don't tell you what to do. You're asking the wrong questions. If that's what you think is happening here, you're asking the wrong questions. MACD doesn't know anything. Oscillators don't know anything. Moving averages don't know anything. QuantBox knows quantitative analysis of macroeconomic data, aka it does fundamentals. Traders does technical analysis, nothing but technical analysis, but to a granular level that's almost hard to believe. But they don't know. You're the boss. You're the adult in the room. You're the human with a heart and a brain. Okay? And what you do with that is you make decisions. You take responsibility. But you're informed. And you're confident. And you're strong. That's the way to live, my friend. Well, I got to go. I can't see I got to go. The market's going to open. I hate when that happens. The market's going to open. There we go. That looks all right. Market's going to open, so I got to get going. But if you share my vision and you love what you saw today, leave a comment below the recording. Let me know what you like. Let me know what you hate. Let me know if you're interested. Let me know if you're no way. Okay? Just let me know. Leave a comment. Not in the chat. I'm going to stop the recording. You'll have to refresh your page, and then you leave a comment, okay? Peace on earth. May the pips be with you. May your profits be above average. I'm going to stay and read your comments. Bye.